Hello traders, Gary Wagner here at just about 1:45 in Honolulu, 6:45 in New York. It is Friday. Happy Aloha Friday, as we say on the islands. 21st day of February 2020, and this is the Daily Report for gold and silver, our weekend review, and what a week we have seen. It's historical on many levels, particularly to gold as well as palladium, and we'll discuss both during the technical study part of our show. Now, we did pull profits on our trade today. We'll talk about that in detail as to why we did it and what we're looking for the next move. We'll also take a closer look at palladium, but first, let's take a look at closing prices. What a day for the precious metals traders. Substantial moves in gold, in palladium, in silver, with the exception being platinum. That did close a little bit lower. We are currently looking at April futures at $1,645.90. That is a net change of $25.40. Of course, we sent out a trade alert this morning recommending that we take our stop to the market. In other words, cover our trade. Traders, we got out at $1648.60, so about $3 above current pricing. When we pull up our technical studies, of course, we'll explain the rationale behind it as well as our next move. Platinum currently at $976.90, down $2.10, and that is a closing price because we are closed until Australia opens on Monday. Palladium up 1.56%, a new all-time record high, a net change of $40 at $26.14, and silver gaining about 0.75% at $18.4550. And traders, that was with some strong tailwinds from a dollar which fell about 0.5%, still above 99.21, but nonetheless a pretty strong move to the downside. Let's take a look at our current technical studies, talk about our trade, and talk about our next move. We are looking at a daily chart of the continuous contract of gold futures, this representing April at this point. We have Fibonacci extensions that we have added in there. The way I am looking at it is as follows. We did pull profits today. We pulled profits for a couple of reasons. The primary reason was that typically a wave 5 move will take you to about the 0.618 extension of wave 3. That's right here. And that's what this number represents. The 0.75 extension represents 1670. So there is a little bit more room to the upside that is possible. However, it is the weekend, and it is the only time when Australia will open and react to anything that happened during Saturday and Sunday for them over there. And because of that, a stop that we would move up will be subject to get out at any point the market opens at. So if it opened down $40, that's where the stop would get hit. Of course, the reverse is true. If it opened up $40, that's where our next price would be. I do not mind buying a breakout, but I felt comfortable in pulling a pretty decent profit, considering that we got in at 1604 and change and got out at 48. We were able to pull $44 of profit, which represents $4,400 per contract. And that is a nice way to work into the current month of February. It should set us off to a really great start this year. But last night, the market was trading fairly strong. In the morning here in Hawaii, of course, we already saw it up about $25, which reminded me of a story by a famous stock trader named Herbert Hoyle. He traded in the 50s, and during an interview, he was asked the following question: why is it that the majority of stock traders typically lose money when you have a consistent record of making money on your trades? And his answer was one line and simple, but I believe with a lot of truth. He said, it's simply because I always sell too soon. And in that light, I felt we had some very nice profit on the table. And if it continues to rise, I have no problems buying the breakout. If we get some sort of a dip next week, we'll look for the proper place to re-enter it. In other words, I do not think this rally is over, but it is highly likely that we might in fact see some sort of softening at the beginning of next week. We'll just have to see how that works out. Nonetheless, we pulled a great profit. My recommendation is obviously over the weekend to maintain our neutral stance and celebrate in the fact that we made about a 40% profit or return on a trade that didn't take us all that long. And traders, lastly, I do want to take a look at Palladium. If you recall from earlier this week, I cited a report by Johnson Matthey that talked about the severe deficit between the supply and demand of that precious white metal. What the report said simply is that there is going to be a greater deficit between the supply and the demand in 2020 than there was in 2019. We saw what happened last year. It rose tremendously, rising from about at its low $800 and then closing out the year at approximately $1,200. Well, now we're at about what? $2,500, $2,600 per ounce. It is simply the most spectacular rise in a precious metal that I have witnessed in my 35 years of studying the precious metals group. How high will it go? Well, we put numbers out that started at 28 to 3,000. Are those numbers still possible? Yes, they are. But there's one caveat to looking at Palladium. It is running on a supply-demand scenario, and that is not going to change. But market sentiment can turn on a dime. And I expect at some point, even though the supply-demand will not change, there will be a point when there will be a massive sell-off due to traders wanting to take profit. And I certainly don't want to get caught in that. But nonetheless, it is something to look at, to consider. We've been talking about it for a couple of weeks. This has been Gary Wagner, wishing you, as always, good trading. Have a great weekend. We will talk to you on Monday for the next daily update and review. Bye-bye.